Returning to Kitco is another fan favorite, E.B. Tucker, Director of Metalla Royalty. Welcome back, E.B. It's been a while. It's been too long. How have you been?
It's been absolutely too long. Thanks for having me back, David.
Thanks for joining us again. Let's talk first about FTX, the biggest headline in the crypto space right now. We don't have to get into the details, but I do want to ask you, I've been thinking about this on my way to work today. If a major crypto exchange, whatever you want to call it, has collapsed, bringing down people's money with the collapse, what's stopping a bank from basically undergoing the same procedure, so to speak?
Well,
what's stopping a bank from collapsing and having my deposits gone? I mean, I know in the U.S. there's the FDIC, Canada there's the CDIC, but that only protects me up to what, 100,000, 250,000?
Yeah, it's funny because you were saying let's get into the details, but we don't really know the details. All we know is a couple of kids sitting around on beanbag chairs managed to lose about $60 billion worth of leveraged trading capital, which is a bit bizarre on the surface. Kind of tells you there's probably something going on there that we'll never know. But I don't think we need to know, because in my book, in chapter 17 of my book, Why Gold, Why Now, I talked about FedCoin is the ultimate destination for crypto technology. Now, in the interim, you had 13,000 coins, Pancake Coin being my favorite coin, of course, but I also like Sushi Coin and all the tokens I actually like, because it's amazing to me that people have Pancake Coin worth $500 million and they still haven't sold that. But then you have 600 exchanges. Now, most of these entities associated with crypto will go bankrupt. Okay, so it doesn't mean that crypto goes away. It just means that the speculation was so out of control that you had so much hoping and leveraging and betting and gambling going on that the hangover is going to be intense. Now, let me just point this out to you, because what you guys need me for is that the news can be confusing. All right. But remember, Three Arrows Capital is gone. Remember, the Luna coin is gone. All right, try to make a list of all the blow-ups, bankruptcies, or nothing was there that's happened this year. Try to make a list of that. Like later on, I'm talking to people watching. It's unbelievable, because each thing that happens is like a total surprise, but it's not a surprise. Okay, there's a readjustment going on here. You'll eventually have FedCoin. The Fed is testing a digital dollar payment system as we speak. There's been news out on that this month. So if you read my book, it's not a surprise, and you know what to do about it.
Okay, we're going to touch on that. But first, let's go back to my earlier question about whether or not you feel safe having your money, your fiat currencies, U.S. dollars, in your bank, in custody under J.P. Morgan Chase or whichever bank you use, right? I mean, basically, my question is, if FTX collapsed, what's stopping, let's say, J.P. Morgan or something else from collapsing and bringing down your deposit, your checkings account with it?
Well, I think the average person does not need to worry about this, so to speak, because you can spread your money around. I mean, I know at Goldman Sachs high yield savings account that's available online, I think the limit there is $1 million or something that they'll pay interest on. There's all the FDIC guarantees. You start moving the money all over the place. But I think for the average working person, you have to spread yourself out a little bit, right? Like, you need money in the bank because you need to pay bills. Okay, that's just a reality, and it's very difficult to avoid that. But you're putting your crypto on a stick and hiding it somewhere is not going to save you. I mean, a really good friend in Los Angeles I had dinner with last week, and he told me that there's a story. You got to hunt for it. I think it's on Medium or one of these more alternative sites, where the guy put the crypto on a cold storage stick, put it in a cereal box, and the feds found him. He was under investigation for something. So the point is, you got to spread yourself out. It's why I've been a big fan of gold. It's very difficult to find gold. I think you got to have cash in the bank. I think you got real estate. You go down to Latin America, people have real estate. They own it cash. Why do they own that? This is the best you can do. It's like having a vault somewhere. So you have to spread yourself out, because these things you're asking about, these are once in a generation type crashes. And so it's difficult to prepare for them a week in advance. But I think you just have to live your life so that if something happens, it's not going to chop off all your limbs. You might lose an arm, but you can certainly keep getting around.
People are concerned about a Lehman-style collapse, not just in the crypto space, but contagion spreading to other sectors within the financial system entirely. The entire system is going to collapse. Some people have gone as far as to say that. Is that something you're concerned about?
Well, let's simplify this. Okay, we go back 20 years ago, and the leaders of the U.S. made a decision that they would go with financial engineering. So you went down this path where you were trying to create a lifestyle that was stable for people, and what you were doing was you were eroding the base of the society. So less than 1 in 10 people by 2008 worked in manufacturing. There's more real estate agents than farmers at one point. Now there's far more. Now we produce nothing. We use borrowed money to do everything. So obviously, the entire system is propped up by borrowed money. Now, myself, I do not actually bet on a system collapse. What I bet on is for people to slowly spend a higher and higher percentage of their money trying to keep up while the value of their assets is going down. And once that gets to a point where people start throwing rocks, instead of just griping to each other, I think that then you step in with the next round of stimulating, and that comes with everybody accepting Fed coin, kind of like the checks that came out during the COVID situation. You would have that with Fed coin, download the digital wallet, get your first Fed coins that you can spend, blah, blah, blah. So my point is that I don't think this system collapsed so easily. I have people that I know very closely that bet on system collapse. And my response to them is, I hope you have a lot of money because it could be a while. Okay. So because people, you need to be careful betting on something that you don't know when this could happen. Okay. So the Lehman style event is extremely rare as far as probabilities go. The whole country is bankrupt. Okay. So it's more important to not to bet on something like this caving in. Okay. But to play according to what you see going on. That's what people miss.
Speaking of housing, the Dallas Fed projected that in a worst case scenario, they projected that housing will decline by 15 to 20%, bringing down consumer spending with it. It's just interesting to me, EB, that housing, among other asset classes, are starting to decline, roll over, while inflation is still elevated. So on the one hand, you've got consumer prices going up, if not already elevated, and on the other hand, asset prices are coming down. Can you explain this dichotomy?
Yeah, that's right. It's a huge problem. All asset prices are coming down. Okay, real estate's coming down, crypto's coming down, stocks are coming down. Gold is flat. People, you would listen to them, they act like it's going down, but it's actually doing okay. So when you think about it, everything that you own is going down in price, but everything that you need to buy is going up in price. So this is called financial repression, and this is going to go on for a while because people are unable to see what's happening. And that it's kind of like if you don't know something's wrong with you, you keep doing the behavior until something's really wrong with you. So that's what's going on now. I've been in the airports this week. I've been in hotels. I've been in restaurants. Everything is full. Nobody is complaining about anything. All right. So this is going to carry on for a little while. But to specifically look at housing, I sold 5 houses this year before the summer. Okay. And everybody said, oh, wow, you got so lucky. Well, not really, because what happened was as soon as I saw the Fed kick into gear, okay, I sold everything. So I'm thinking, we have no idea what these guys will do. Now the mortgage rate is 6.5% according to bank rate. I've heard it's higher than 7%, but it says 6.5% on the Bloomberg. I just checked today. And if you talk to people, they'll tell you, I can't move now because I got this 2.75% mortgage during COVID. So listen, it's very important what they said. Can't move now. So they're not going to move. If they're not going to move, they're not going to buy an air conditioner. They're not going to buy a new furniture. They're not going to generate real estate commissions. And they're not going to eat up another house that's on the market. So what that means is, I don't know if the Dallas Fed guys are right. They're usually not right. But what it does mean is that real estate got carried away. And so what has to happen now is you ate a big lunch and you have to digest it. And it could be painful for people that need to move.
I think it was something like, I can't remember the report exactly, but 40% of all the gains in housing over the last decade were from the last 2 years alone. The pandemic really boosted up housing, and you sold 5 houses with properties of your own. Is that something you've observed?
Yeah, absolutely. I mean, that's why I sold, because I was looking at the people buying these places, and what they were effectively doing was signing up to be a landlord and to barely make as much money as treasury bills now pay, right? So to me, that makes no sense. I mean, being a landlord is difficult. I mean, obviously, I'm not doing all this work myself, but I'm saying you need to get paid in order to provide housing for people. And if you're not going to do that, then you're speculating, you're betting on the price going up. And to your point, when you see prices go up like that, it's too far, too fast. Now, same thing's happening in stocks. The stock market still has adjustment to come. And if you notice, it's a slow motion crash. It's a slow motion crash. Look at all the big tech guys, Bezos, Musk, Zuckerberg, all these guys. They all sold tremendous amounts of stock at the end of last year. And all those stocks are way, way down this year. And they're going to go down further, not because they're bad companies, but because you had financial engineering for 20 years. And what happens when you have financial engineering is people at the top get free money, and they take that free money and they gamble on stuff. And what they do is they take something that's a 20-year out bet, and they make that bet today because the money was free. And so we're in a process now. This is my point, David. We're in a process now where if you see what I'm talking about, you realize what your move is. Sit down, do nothing, okay? This summer, I was telling people, treasury bills, cash, high yield savings account, go to a concert. Everybody said, what are you talking? You're crazy. There's got to be something to bet on. Nothing is up. Nothing is up. You're doing great if you have a business that you really like and you own that business and you can keep buying it cheaper. That's good. But nothing is going up.
Too many people I've talked to are holding off on buying houses because rates are up. But I've also heard the counter argument that now is actually a good time to be buying precisely because home prices have cooled down a little bit. And you can always refinance in a few years when mortgage rates are a little bit lower. You can refinance. So it doesn't really hurt you long term. What do you think?
Well, I do not think it's a good time to buy. But in fact, I am trying to buy a house actually today. So I don't want to sound like a hypocrite. But I'll tell you why I'm buying the house today is because it's a very nice place to live, and it happens to be something that I want. And I think that people should look at their house not as an investment, but as a consumption item. You got it. Where you live changes your mood. All right. So you don't sit around and wait for the perfect price on a house, because if you're sitting in stocks and waiting, probably the stocks go down at the same time the house goes down, right? The way you maximize enjoyment in your life is you find a place that's suited to you. You try to negotiate a fair price on the place, and you buy it. And people say, "Boy, that was bad timing." You say, "I bought this because I liked it." Now, if you have rental property, different ballgame. That's a different ballgame because rental property can only make your mood worse. It can't improve your mood. Okay. The way a house that you live in can. So if you have rental property, you need to time the market more. But people that are sitting and waiting to buy a house, I mean, I understand being prudent and saving your money and not being careless. Okay, I'm not trying to say shoot the gun, aim later. I'm not saying that. But what I'm saying is lifestyle choices sometimes are not always about just money. It's about more than that.
People are thinking, if I have $100K or $200K for a down payment, I'd rather put that in the bank right now. I'll be paid a 4.4% APY on a CD rather than paying out 6% in a mortgage. So they're thinking, well, that's just called, earn yield.
That's just called sound thinking. I mean, because you're not saying I'm going to delay housing forever. You're saying I'll collect this interest, let the market adjust a little bit, and I'll spend that time to shop for a house and to really be smart about it. Okay, to not be quick. But that's not delaying indefinitely. That's saying, I know this is going to sort itself. It's not going to be forever, and I'm going to be ready to take action then.
How bad really is this Christmas season when it comes to shopping, retail sales, and so forth? I've heard all sorts of reports. I want to get your take. Are people really going to really cut back on spending? Is this going to be the start of a Great Depression, like some people have warned? How bad could it get? Or perhaps it's not going to be very bad at all.
I don't see that. I mean, now you have, in fairness, I'm a minimalist and I do almost no shopping. So it's
all right.
You just take these comments with that fact.
Like most men, but that's fine.
Well, even more extreme. Yeah, I do pay a lot of attention to everything around me. And my friends make fun of me for this, but I'll go on trips and I'll sit in the airport and not in the lounge, because in the airport is where most people are, not in the lounge. There's only a few people. And I want to see what people are up to. I want to watch what they're buying. I want to watch what they're playing, and all these different things. And the reason why I want to do that is because you can get a really good sense for what's happening. I don't see any fear with people swiping their credit card right now. And so what tends to happen is once they get afraid, then they trade down. Okay. It's kind of like saying, I was going to get the Coca-Cola, but now I'm going to get the Sam's Choice cola, I'm still getting a cola. Okay. Now, once things are really bad, you're drinking water from the tap. Okay. So what I'm saying is we have a long way to go because I don't see people making these choices yet. And I see everything full. I have not been on a flight that wasn't full in a long time. And I take a lot of flights. So,
Yeah,
so,
it's
so
interesting. Yeah.
it's nothing. Nobody's complaining. Now, people say, oh, the gas got high, but oh, it's okay now, whatever. Okay. The U.S. ran through half of its strategic petroleum reserve. I mean, there's problems, okay? There's problems. It doesn't mean things are great, but Great Depression, no more spending, I'm not so sure. I think you're seeing people get laid off. That's got to run through the cycle. All these things take time to play out. Now, once they play out, they're hard to stop, but it takes time.
Earlier in the summer, reports were surging on the internet about revenge travel. The term applies to people traveling more than they used to because COVID shut everyone down. And so now they're, I don't know, enacting revenge on the system by traveling more than was allowed. I don't know if that's going to continue. To your point, yeah, a lot of people are continuing their shopping habits. I wonder what's going to trigger a slowdown. Is it more declines in asset prices? Is it even higher inflation? Is it higher unemployment? Unemployment is still really low, right? 3-point-something%, not even 4% yet.
Look, I'll tell you what's going to cure. I mean, when do you stop doing drugs? It's when you run out of them. So, I mean, that's what's going to happen. It's like when people run out of money, that's when they stop. You know, you got 20 years of training Pavlov's dog to swipe the card, borrow against the house, borrow, get a new car. Everything, this behavior is set really in a cognitive loop in the brain. And so nobody is thinking otherwise. That's what we do as people. We get comfortable and then we're committed to these ideas that we've accepted as facts. So everybody's going to charge towards the cliff, and once it's, you know, they're all the way over, then they'll say, I guess there was a cliff there. But basically, we have some time to go there. Now, 7.5% mortgage, 8% car loan, 25% credit card balance. Somebody got laid off in the household. Yeah, this definitely speeds things up a little bit.
Okay, well, that's starting to paint the picture for a lot of America right now. You know what's interesting around the world is that people are starting to de-dollarize. Here's a story from Ghana, actually. I'll just read the headline from Reuters. This came out just yesterday. Ghana plans to buy oil with gold instead of U.S. dollars. Ghana's government is working on a new policy to buy oil products with gold rather than U.S. dollar reserves, says the vice president. What's going on? Is this a larger trend, EB?
Let's ultra simplify this so people understand. In 2019 in London, I gave a speech. You can find it on YouTube. Somebody put it up there, that the world had been in a globalism for 25 years roughly, where it was kind of a global order of trade. We were outsourcing, all these things were happening, and that was finished, and that we were going into zones. And so before you invest, you need to try to figure out what your zone is. And everybody was confused at the speech. And I tried to explain to them, I'm not exactly sure what the zones are going to look like, but I'm going to tell you that the zones are going to compete with each other. Now, think about this. The countries that produce the resources in the world, all right, typically are not asked to be part of setting the rules for the world. Does this make sense? Like, who sets the rules? You look at the United Nations, you look all over the place. Who sets the rules? The big powerhouse industrialized countries. The EU, countries of the EU, the countries in, Northern North America. These are the countries that set this. Now, we're seeing a shift. And the shift is the countries that produce the actual raw materials are now saying, we want a seat at the table. Now, when you reference Ghana, everybody says, oh, that's a small country, GDP-wise, whatever. It's important because you also saw Saudi Arabia make a statement that they were going to no longer let people in New York set the price of oil using paper. Think about it in the gold market. Think about what happens in the gold market. The New York COMEX trades much more paper than it does gold and fixes the price. The price is not set by end users. It's set by the COMEX. The New York NYMEX sets the price of oil. Now, the oil producer, the biggest in the world, says, we're no longer going to let someone in New York with a bunch of paper set the price of oil. Ghana says, we're no longer going to take dollars for oil. We're going to take something we believe in. Now, instead of just looking at Ghana, you have to say, I'm noticing a wider trend that's developing here. And this is going to create pressure on the U.S. system.
Who's buying gold? with oil. I mean, Ghana is buying oil with gold, but someone's on the counterparty selling their oil, accepting gold. Who's going to do that?
Well, they're not usually going to take the actual gold. I mean, this is just going to be gold is going to be the pricing mechanism. So basically, that's going to be that they're saying we trust the gold price more than we trust the dollar price because the dollar price is under control of something that is very difficult to keep track of. And so the thing is that they're not going to hand a bunch of bricks of gold and then take the cargo of oil. This is going to be done through an offtake agreement, right? But they're going to say
whoever is selling oil, whoever's selling oil to Ghana is probably not concerned about upsetting the United States. Is basically where I'm getting.
The thing to keep in mind is that take India for example. So India is trying to pursue this policy of neutral alignment with all the parties. Like they want to be cordial with the Chinese and the Russians and the United States. And if you notice, they're also pretty eager buyers of Russian oil. So my point is that you can read the headlines that say Russian oil is bad because it does this and this and this, but people in the world that need oil are saying we're going to stay out of that fight. We actually need the oil, so that's what we're going to do is we're going to buy the oil and we're going to be quiet. But there's going to be people buying oil, gold, copper, lithium, cobalt, all these essential rare earths, all these essential things that we need. Just remember something: the U.S. doesn't mine very much of this stuff. The wells and the shale production is in decline. The U.S. hasn't allowed a substantial amount of copper and other essential metal mining, and now they're kind of in panic mode trying to find this stuff. And then, as you know, the mining sector as a whole has not found any real substantial new supplies of most of these metals for years. You're setting up to see a massive shift where the producers are going to have more power than the consumers. For the last 20 years, the consumers had all the power. The person buying the iPhone had all the power, but now the person making the metals that go into the iPhone is going to have more power, if that makes sense. So this table is turning. And it's going to turn a bit slowly in the beginning, but then it's going to go very fast at the end.
Mm-hmm. Well, you raised a good point about countries staying neutral on this Russia-Ukraine issue. Keep in mind, and this is not often reported in mainstream media, but keep in mind that a lot of protests have erupted throughout Europe against embargoes on Russian oil because of inflation, because of where energy prices are going. So not everyone supports the embargo. Finishing off our conversation, I want to talk about your latest venture, the carbon neutral company. Let's talk about that.
So everybody knows me from Metallo, which everybody's kind of down on, except for Metallo's really doing great. I mean, if anyone follows the insider buying, I put a lot of money into Metallo in September when the stock was low, and I'm very happy. I mean, I try to explain to people when everything's going down, you got to worry about what you own. So I'm very happy with what I own. I have lots of Metallo, and I'm very positive about what we do there at the company. The value that's being built is incredible. And royalty sector's had 9 takeovers of small companies in the last 18 months. That's an incredible. I was quoted in Grant's Interest Rate Observer last week as giving some of those stats. It's incredible. Now, what we were able to do with Metallo is we really know the royalty business very well. We started a carbon offset royalty business, which is quite big. So we now are a huge financing mechanism of the #1 stove producer in the world. And there's 2.5 billion people cooking with biomass, which is effectively trash and raw materials. Mm-hmm. And we intend to get stoves in the homes of as many of those as possible, to the tune of upwards of 500,000 a month of those stoves at peak capacity, which is absolutely incredible. And anyway, the point of the story here, David, is that carbon credit generation is a mega trend. You just saw COP27 go on in Egypt. Say what you want about all this, the headlines that you see. It's a mega trend. Everybody's committed to net zero. Nobody knows how to get people there. We know, and we're doing it. It's still a private company now, but you can go to the website, carbonneutralroyalty.com, and sign up for the press releases. This company is probably going to be bigger than Metallo and Nova combined, simply because of the fact that the carbon industry is growing at a pace that is almost hard to believe. You have to look twice at the growth numbers. That's how crazy it is.
Voluntary carbon market, we'll end it here. Voluntary carbon market. Which countries around the world do you see the most potential for growth? You're talking about this growth that's unbelievable. Where are we seeing this growth?
Well, so you have every company out there has made a promise to be net zero, and nobody knows how to get there. So the voluntary carbon market is a huge market. There's a lot of different stuff going on. I mean, to say that there's one credit is very difficult. So all these companies coming into the space, they all need to do this, and then the U.S. is going to be reparating money back to other countries that have suffered the effects of climate change, pumping money into developing credit packages in these countries. It's unbelievable. There's trillions and trillions of dollars being invested in this carbon chain from top to bottom. But let me leave you with two quick things that are tied together. Number one, anybody that read my book knows exactly, we laid a lot of this stuff out that we've been talking about today. We laid it out in simple terms early on, and a lot of it is, as you know, has played out exactly as we expected. The one thing that hasn't played out is the gold price, which is a bit shocking considering we printed all this money and gave everybody 4 booster shots in their arm and gave them checks and all these things. And then we, all these things, wars everywhere that have happened, the gold price is stuck. Now, while the gold price is stuck, it's tough to own gold. It's tough to own a gold miner, not that tough to own a royalty company. So keep an eye on Metalla, David. Keep an eye, watch Metalla, watch the news.
We will.
Watch what we're doing, because this is a big company now, all right? Closing in on 80 royalties. This is a big company. It started from next to nothing. And people that read my book know how we started. I mean, Brett and I put this thing together, and we're very happy with it, and we're very proud of it, and we own lots of it, and we buy lots of it. And there's a reason why. It's not because we're crazy. It's because it's a really nice way to be patient with gold. And most people have trouble being patient, but not me, David. No. I know what we're playing for. And it's a lot of fun when you do.
I actually have Brett on next week, so I'm looking forward to following up with him as well. And I'll follow up with you on gold next time, but I just want to end on this question. Going back to carbon credits, is this really going to help the world bring down carbon emissions? I mean, this sounds to me like, and correct me if I'm wrong, EB, this sounds to me like an opportunity for people to just make money off carbon credits. Big companies are going to buy these credits so they can offset their emissions, but the more they purchase, the more they're just going to emit. So we still have the carbon in the air?
Sort of. The couple key pieces are missing in your analysis.
Okay.
They're not just allowed to buy the credit and continue emitting. There's effectively a net zero commitment, means that they've got to show a path to net zero over a longer period of time. Then to the question of, is this going to help? People ask me this all the time. The true answer is that I don't know, because I'm not a scientist and I'm not from the future. However, what I do know is that this is the path that the leaders of the world have chosen as the path. So you'll get down the line, many, many years from now, and you'll know if the 1.5 degrees Celsius target was the right one, or who knows, there could be a giant volcanic eruption and the world turns into an ice age. It's impossible to know these things, but I do know that this is the accepted science. This is the law. This is how it's developing. And if you look at those 3 things and you decide to not participate because you think in the future it might be different, that is a bit crazy.
I know you're not from the future, but let's close on this. Your gold price prediction for the future. Let's just take 6 months out to 1 year out.
David, it's so hard because it's $17.50 today, which makes absolutely no sense. And it stays at $17.50 almost as if someone wakes up and has a coffee and knocks it back to $17.50. The question is going to be, what happens when it breaks out? And when it breaks out, which I think potentially could happen in the beginning of the year, first part of the first quarter is a huge time in gold. Everybody watching this knows that. As soon as this thing breaks, it's going to 2070. As soon as it breaks, it's going to 2070. That's the old high. That's the place where it wants to go on the chart. And so let's do this. Let's get back together before Valentine's Day, like first half of first quarter. And let's see if I was right, because when this thing goes, it's going to go in a hurry. And my suspicion is it's quiet until the end of the year. And then that first 6 weeks of the year, we could see a lot of action. Remember, that's what happened in January of 2016. I don't know if you remember, but everything was sleepy for a year or two. Mm-hmm. Boom, it took off and gold went on an epic run. and the gold stocks, the gold royalty stocks, went on an even more epic run. So that looks probable right now. It's been about as dry as you can imagine. From what I hear from my dealer network, there's not a lot of people buying. Dealer sales are down, the premiums are coming down, demand is down, but central banks are buying, and wealthy people are buying, and people that know gold are hoarding the gold and holding on to the gold because of the questions you asked me earlier. So get ready, get the things that you need while they're on sale, and let's see if this thing takes off, because when it does go into 2070, it's not coming back.
Well, speaking of sale, it's Black Friday today, but I don't think we're talking about tech. I think we're talking about gold. Maybe they have a gold section over at my Best Buy. We'll see.
Unlikely, but you can get a copy of Why Gold, Why Now shipped to you in very, very, very small amount of time. It comes straight from Amazon and Prime, and it's the perfect stocking stuffer.
It is a great book. I've read it, and you should too. Thank you, EB, for coming on the show today. We'll speak to you next time.
Thanks, David.
Thank you for watching Kitco News. I'm David Lin. Stay tuned for more, and don't forget to subscribe to our YouTube channel.